Now that you're familiar with Pendle, it's time to explore some advanced strategies to take your yield trading game to the next level. In this video, we'll share a few yield trading strategies that you can explore to maximize your yield according to your risk appetite. Let's dive in. The first strategy is buying principal tokens instead of spot tokens. For example, if you're already holding ETH as a long-term investment, why not swap it for principal tokens and earn a fixed yield on your ETH? By doing so, you will benefit for two reasons. 1. By converting your ETH to PTST ETH on Pendle, you will outperform ETH at maturity. 2. You'll get more downside protection from ETH price fluctuations because if the price of ETH declines, at least you'll get more ETH at maturity. Plus, in terms of market risk, this is similar to just holding ETH in spot. Note that this strategy applies not only to ETH, but also to all supported assets on Pendle. This is the simplest strategy of all. Just buy, hold, and earn more with PTs on Pendle. Secondly, let's touch on some delta-neutral strategies that you can explore using Pendle. Delta-neutral strategies usually consist of two or more positions that balances the positive and negative price of an asset so that the overall exposure to price fluctuations is zero. For example, if you long ETH on a decentralized exchange and short ETH on a centralized exchange, no matter if the price of ETH goes up or down, your overall balance will not be affected, as those two positions cancel each other out. You can apply the same concept on Pendle to earn yields while having no exposure to price fluctuations. Here's the general idea. An LP position on Pendle is similar to holding a spot asset, while earning additional LP yields on top. By pairing that LP position against a short position on a centralized exchange, any price movement of the asset cancels each other out, hence achieving a delta-neutral state. Provided that the funding rates are positive most of the time, this means that the paired LP position and short position has zero price exposure, while earning both the LP yield and the funding rates from shorting. It's basically yields on top of yields. This strategy is particularly useful if you want to de-risk from the crypto market's volatility while earning its high yields. Another strategy, which is more capital efficient, is using principal tokens as collateral. Pendle has amassed a widespread adoption across multiple money markets and DeFi to support PT and LP tokens. The idea for this strategy is simple. You deposit your PT into a money market as collateral and borrow ETH or USDC in return to do whatever you want with it. Or buy more PT to have a leveraged fixed yield. This concept applies to LP tokens as well. Essentially, this strategy creates the opportunity for looping, which is basically the cycle of depositing more PT as collateral and borrowing more ETH to buy PT. But be careful, as the more you loop, the riskier it gets. Please do your own research and manage your risk wisely. Last but not least, never miss a trade with Pendle's limit order feature. Similar to other limit orders and exchanges, Pendle's limit order feature enables you to set your PT or YT orders at your desired implied APY. These orders are then readily matched with other limit orders or market swaps for optimal results. By using limit orders, you avoid any price impact as the Pendle AMM automatically fills in the order at the set implied APY. This is especially helpful for larger size trades because the price impact can be significant. On another note, you can also use limit orders to swing trade efficiently, especially if you think that the yield will fluctuate within a certain range. Using STETH as an example, if you think that the yield of STETH will range between 3 to 5% in the coming weeks, you can set two limit orders, one at 3% implied APY to buy YT, and the other at 5% to buy PT and sell YT. By doing so, you'll be able to buy low and sell high, even if the pool is trading out of range. Just set, forget, and let Pendle's limit order fill in your trades. To use limit order on Pendle, simply click on the Limit tab. Key in your input, your desired implied APY, and your limit expiry. Once you're satisfied with the output, just place your order. Congratulations! From now on, you will never miss a trade on Pendle. That's it for today's video. If you want to learn more in-depth about yield optimization, yield trading strategies, and Pendle Finance, check out our videos right here.